So we got some news last night that is making markets pump. The Dow, the NASDAQ, gold, Bitcoin, all markets are pumping. Mortgage-backed securities and your rates on mortgages are going to improve today. And I'm going to tell you why this is happening, what I'm doing about it. And I'm going to tell you something else that not many people are talking about rates moving forward, and why I think differently than the entire crowd out there and a lot of the narratives that we've seen here in the recent past. With that, I'm Joe Harris. I'm the Chief Operating Officer at Morgan Financial. I've been doing mortgages for 20 years here in Brevard County. Morgan Financial has been around for 24 years, and we've done billions of dollars of production. So stick with us. Watch the information I'm going to give you here on Joe Knows Mortgages Mortgage Market Update today. So let's get right into it. Let's talk about what's going on in the marketplace. So markets are pumping. They love the news. And the news, the big news, unless you've had your head under a rock, which I don't blame you these days, the big news is that Iran has seemingly admitted to making a deal with the United States and President Trump. You know, President Trump says a deal has been imminent for, 20, 30 different times. But this time around, it appears that even Iran has admitted to it. It's supposed to be signed Friday. I'm going to tell you why that's important in a little bit. And what you can do between now and then to be prepared if you're looking to lock a loan, if you're a loan officer who has to lock a client's loan, and how to advise them. I'm not going to tell you exactly how to advise them. I'll tell you what I would do. So short term, let me show you this. Today, the markets love the news. The Dow Industrial Average is pumping up 2%. This is at, 11:30 a.m. Monday, June 15th. So the Dow is pumping. NASDAQ, 2.64% up. Gold is even pumping 3.18%. And my personal favorite, Bitcoin, 66,000 and change. Obviously, we're in the middle of a bear market for Bitcoin. This isn't a Bitcoin show, but I do like the Bitcoin. That being said, this is the important factor right now, is the mortgage-backed security market. And for those of you who don't know, mortgage-backed securities is when you do a loan, they're collateralized and sold off as a fixed income instrument or a bond, and they're sold to countries, they're sold to pension funds, insurance companies, all kinds of different places, because they give a fixed rate of return. So if a $100 bond produces 5% return, if it's a 5% coupon bond, that means the return on that is going to be, what is that, 105? It's going to be $5 per 100, regardless of what you paid for that bond. So the way that this works is that it's an inverse relationship. If the price of the bond goes down, that effectively gives you more yield, because if you only paid $94 for something you're getting a $5 return on, let's do my math, 5 divided by 94, that's actually a 5.3% return. So that means that the price of the bond with the inverse relationship means that the lower the price of the bond, the higher the yield or the interest rate. The higher the price of the bond, the lower the yield or the interest rate. And as you can see here, this is the mortgage-backed securities going back about 3 years. And 1, 2, 3 times have we tested this line here. This became a ceiling of resistance. Not to get too technical, but when we bounce off it 3 times over 3 years, it's a very strong ceiling of resistance. You see it went up there, it came down, retested, failed, went way down. And as you can see, the movements are getting smaller and smaller, which means it's consolidating and a move is going to be made. And we almost made a move back out here to break through the ceiling of resistance. And then the war happened. We were moving that direction. It was so tight, and it was about to bounce, and rates were about to go down. And then on February 28th, I shouldn't call it a war, we bombed Iran. And then that caused rates, the price of the bond to go down and rates and yield to go up. And then we went down through this floor of support, and it bounced back up to test it, failed again, and we stayed under there for a couple weeks now. These are weekly candles. Don't have to be an expert in any of these things. I'm going to show you why this matters, what I'm doing about it, and what you could possibly do, whether you're a loan officer looking to lock in someone's rate, or a borrower or a homeowner looking to buy a house and want some rate advice. Then you're in the right place. So look, this shows that on last week, Friday, today's June 15th, Monday, but on Friday, Thursday of last week, we had a very big move in the bond market. Friday, there was some profit taking. In other words, people realized the price of the bond had hit their target, they sold it. And so we had a little bit of retracement. But today, the market is responding in kind to more news. Now, I'm going to tell you this. There's two pieces of info I'm going to give you in this this podcast or this blog, whatever you call this video today. The first one is this: the buy the rumor and sell the news is a real thing. Now, Friday, everyone's anticipating that the deal is going to be signed with Iran, and in that deal that it's anticipated. So the rates are going to be baked in by the end of the week. Now, rates, I believe, will improve this week continuously unless some bad news or something happens with that deal. If it blows up before it even gets signed, expect oil prices to go back up. Now, one thing we didn't show you is the price of oil. Oil prices have gone down significantly in the last, down 3.64% in the last day. Last 5 days, down 7%. Last month, down 26%. 6 months, we're still up 31% because we started the year at $57. We're at $74 now. We spiked up to almost $120 a barrel. That was danger zone, but we didn't stay there too long. You're going to hear a big narrative about the supply chain and how this is going to affect pricing down the road. It's partially true, but it's not the whole story. And this is where I diverge from popular thought. I'll get into that in a minute. Hold tight. So going back, we do have this narrative out there that, rates have gotten worse since February 28th, significantly worse. Up here, we're pushing into mid to high fives on some government loans, low sixes, high fives on some conventional loans. And then we went, as the bond price goes down, the rates went up. And when the rates went up, some markets got shocked and things slowed down. We started off this year up 42%. That slowed down. We're still up year over year. There's still multi-offer situations going on in the market. I'm in Brevard County, Melbourne, Florida. And the market here has been strong in certain price ranges with certain well-priced houses. We've seen multiple bidding situations still, even in this market. Now, it's not like that all over the planet. We also, SpaceX IPO on Friday, created millionaires, and a couple hundred of them live here in Brevard County and work at SpaceX here at the Cape. So that doesn't hurt things in our market. But I know some other markets are more suppressed, but I'm Florida-based and predominantly Brevard County. But look at what's going on a national stage. Now, I told you I diverge from popular belief. And let's just do this. If you do Fed Rate Watch Tool, this is by the CME. They price in a lot of risk. So look, the Fed Rate Watch Tool, this is kind of a conglomerate of different people's opinions of where rates are going to go. And this is for the June 17th meeting. This week is Kevin Warsh's first FOMC, Federal Open Market Committee meeting, and he's going to be, this was Donald Trump's placement, but expect him to be feeling things out. I don't think he's going to say we're lowering rates, but the narrative is going to be very important. Now, the majority of people, 98.6%, don't think there's going to be a rate change this coming Wednesday at 2 p.m. when they announce the FOMC results. I agree with that. I don't think rates are going to change this early. I think it's premature. Here's where I do differ from popular opinion, though. All the narratives out there are saying, we're going to have rate hikes because of the supply chain and the oil prices and the war and all these things. And had that been constant through the whole year, I would probably agree. However, I don't think any midterm president wants oil prices high going into the summer months and travel because we have midterm elections coming up. These are my opinions. Do with it as you will. This isn't financial advice. But I do strongly believe that there's going to be a concerted effort to drive those oil prices down as far as possible because, look, no president wants to be a lame duck president in the midterm elections. And whether that, I'm not getting political here. I don't care which side of the fence you're on. I look at the data and decide what to do. Right? I don't get optimistic about it. I look at the data and decide what to do. And the data right now is telling me if oil prices are down 27% in the last couple of months, that it stands to reason that prices are going to come down with it. We didn't stay in that danger zone of 100 to 120 for a terribly long period of time. To say that it's not going to affect the supply chain is probably short-sighted, but to say it's going to have an overwhelming impact on prices for an extended period of time is probably also a little pessimistic. And, if you look at the end of the year, this is all given current data at the time. People couldn't speculate, war's going to end, and if the war ends, this is going to happen. They think, given the current economic outlook, macroeconomic data, geopolitical situations, that this is what's going on in the world. So as of right now, the Fed Rate Watch tool is telling me if we're at 350 to 375, 50, 60, 70%, 65, what is that? 10, 50, no, sorry, math is hard sometimes. 40, 53, 54% chance. So more chance of the rates going up than going down. Now, this is where I differ from popular thought. I don't believe that's going to happen. I just don't believe. Is it hopeful optimism? I hope not. That's even more hopeful optimism. I believe that we're going to see oil prices being driven down considerably. That's even opposed to popular belief. I just can't see a sitting president wanting to lose the midterms, and the thing that they're going to be pointing to is the cost of gas at the pump. Now, it's funny when tables get turned all the time. This does affect people's pockets. If your price to gas up your car goes from $100 to $150, that's $50 less you have in your pocket to spend on goods and services, and that's going to affect things considerably. So what I'm telling you is that I just don't believe. I think all the stops will be pulled out to suppress or lower oil prices, which will drive inflation down, whether that's CPI or PPI. And I believe that we're going to have a different outlook on the Fed in maybe not next meeting, not this meeting for sure, but the outlook, the words, the comments are what to be watched for. Now, let me wrap up by saying this. This is Monday, June 15th. That deal is supposed to be inked on Friday, in Switzerland between Iran and the United States. I believe firmly in buy the rumor, sell the news, okay? Gambling is not my favorite thing to do. If you're a gambling person, wait to see if something even more positive comes from the news. But by Friday, the pricing is going to be baked in that a deal is going to be signed. My opinion is it can only get worse from there in the short term before it gets better, because these are markets. People like to take profits. The traders that trade these things, mortgage-backed securities, gold, NASDAQ, Dow, they like to take profits when they can. My dad always said, no one ever went broke taking profit. And that's exactly where we are right now. So if by the end of the week, if the deal is still, if they're still supposed to be there to sign, I'm of a locking bias. If you have a loan to lock, whether you're a loan officer trying to advise clients, whether you're a client, a homeowner looking to buy or refinance, by the way, if you're looking to buy or refinance and want my help, reach out to me. I'd love to help you. And our team would love to help you. But look, I'm of a locking bias. If you have a loan to lock in your short time frame, whether it's a month, if it's over a month, you might look at maybe reconsidering your time frame. But if it's less than 30 days, I would lock. I don't see rates improving much unless there's other news I'm not privy to that happens between now and then. Rates are you got to buy the news, buy the rumor, sell the news. The news is Friday. If that deal doesn't get inked, if something does blow up, expect rates to get significantly worse. So that's where I diverge in two ways. One, I do believe we're going to see rates improve by the end of the year. I believe that long-term rates and short-term rates will improve by the end of the year. And I also believe that if you have a loan to lock it now going into Friday's news, because my opinion is it could only get worse. That's all I got. If you liked what you heard, please don't forget to like, subscribe, share. And if you need a mortgage and you're in Florida, hit me up. I'd love to help you. Thanks. Talk to you soon.